Hello, good morning. Hello, everyone. This is Charles Dobens, founder of the Multifamily Investing Academy. Behind the microphone, the golden MFIA microphone, if you know, you know. And this is going to be another one of my podcasts where I just sit in here and talk. And what I'm going to talk about is the latest thing that we are focusing on as investors, and that is hotel to apartment conversions. If you haven't seen my ads for it before, where you been? We must not be doing our marketing right. But I have a new program that is wildly successful so far. It's only been doing it for 2 months. So how do you measure success in 2 months? I'll tell you how in just a moment. But we are now focusing on finding deals for multifamily investors by finding hotels that can be converted into apartments. And this concept is absolute genius on so many levels, from demand to supply to buy low, sell high. Everything you are looking for in an investment, this concept has it. Hotels to apartments. I got involved with it because a client of mine, David Peters, was approached by a couple of gentlemen, and they asked him to partner with them on a hotel that they wanted to buy and convert to apartments. Now, this is back in 2019. This concept was in its infancy. I mean, COVID hadn't even hit yet, which has created amazing supply for us investors, but it hadn't even hit yet. And David, called me up. He says, "I need you to help me analyze this." And I said, "I'll do the best I can, but I don't know anything about hotel conversions." And David, one of the smartest people I know, went out and crunched the numbers. And he says, "Charlie, I can't figure it out. These numbers are just unbelievable. There's this, you can't lose with this concept." I said, "All right, well, good luck to you. Let's give it a try." And he went out and he partnered with these other two gentlemen. And he put in $150,000, and here we are 4 or 5 years later. He's looking to sell this property, and this property has generated just for him $150,000 a year of income. So his one-time investment now pays him that amount annually, and his equity is in the millions on that property. They're actually looking to sell it right now, and it's really got to do with the other two partners won out, which is typical. But that was what got the ball rolling. And then I watched him do more and then more. And then I said, let me in on it. I want to invest in these deals. And so then I became an investor of his in now 3 apartment deals that we own. And I'm telling you, folks, I've never seen anything like it. And the numbers don't lie. What the best way to describe what we're doing is, if you take a look at what most of these mentorship gurus teach you, is to buy value add, or buy a C class in a B area. How many times have you heard that line? But what's happening in the market today is cap rates are rising. So you can add all the value you want, but if the interest rates go up a point, you don't have enough value to add to recoup what you lost in value by that shifting cap rate. Numbers don't lie. That's how it works. Do the math. If you look at a property and you add $100 to its bottom line per unit per month, just increase the rents by $100, and your cap rate goes from 4.5 to 5, 4.5 to 5.5. Do the math. Look how much value you have lost by that cap rate reduction compared to the value that you added with the increase in the rents. And right now, the supply is increasing for the multifamily side of it. You have to find the right areas, but the cap rates are moving in the wrong direction, and you'll never beat that. You'll never beat the market. Don't try to time the market. You'll never beat it. But what we are doing here in the hotel to apartment conversion is the equivalent of buying low and selling high, or the equivalent of taking advantage of the cap rate, because what we're doing is we're purchasing a property from its existing owner as one real estate class, and then we're converting it to another real estate class. And what happens in that case is we're buying these properties at the equivalent of a 14 to a 16 cap. Try to find a multifamily property out there right now where you can buy a 14 or 16 cap. And then we're converting it to a multifamily property, which has a lower cap. Even if we sold it at an 8 cap, look at the increase in our equity just by converting a hotel to an apartment. That's what we're talking about, and that's where the big money is made in this business. Then you take the money you made from there and you go out and buy some multifamilies, nice B class that are going back to the bank right now because the interest rates are so high. It's an absolute phenomenal concept. Now, let me explain another thing to you. And why are the cap rates so much higher in hotels than they are with the with multifamily? And my friend, Professor Alexander Cartwright, who will be speaking at our next conference, I've had him on my podcast before. He explains it very well by explaining that cap rates are a measure of the durability of the income. See, I thought I came up with this great idea when I started teaching people that the cap rate is a measure of the ease with which you earn income from a property. The easier the property, the lower the cap rate. The harder it is to raise a dollar, the higher the cap rate. He came in and said the cap rate is a measure of the durability of the income. And just think about it. A hotel's income lacks durability. You have to get out there and sell your product every single night. And if you don't sell that product that night, it's not coming back. People can move on you in a night. But on a multifamily, the durability of the income is so much stronger. People will sign a contract for 12 months saying that they will be coming back every single night and going to pay you every single month and take care of the place every single day. And that provides a much stronger durability of the income, and therefore the cap rates are lower. So we're taking it from one asset class that lacks durability to another asset class that has durability, and that's where we get the cap rate arbitrage, is what I'm calling it. You to buy it at 16, sell it at an 8. You can't help but win. And the way we do it is we look for deals, and I'm telling you, COVID has just created a firestorm in this business. People are not able to make the PIP requirements, which are the property improvement program that each flagged hotel has to comply with. You know, you wonder why they all look the same. It's because they follow a PIP program, and the parent company, the flag, is looking over their shoulders and telling them they have to spend X number of dollars in a 5-year period on maintaining that standard, that quality that they have. And many of these hotel owners over COVID, they lost so much money they can't handle the PIP anymore. And so they're losing the flag, and they're getting out of the business, and they're selling their properties, and that's where we're stepping in. So we know what type of properties we want. We know what type of properties to look for, and right now, let me explain to you how we have created this program. We are not doing syndications. Syndications are, in my book, a 4-letter word. I know you got all these guys telling you how great it is and how they all made money. Yeah, listen, I've syndicated probably more deals than they have in my life. And I'm telling you right now, I consider this syndication model to be the multi-level marketing for multifamily investors. If you have to go out there and tap your friends and family on the shoulder to get into someone else's deal so that you can get a cut of the money you raise, you're not an investor, you're a broker. And the only people in multi-level marketing that make money are the people at the top. Same with the syndication passive investing model. So I have thrown out that model entirely. That is not how my group are acquiring hotels. What we're doing is we're putting, every time we go out and do a presentation, we're doing one coming up in Las Vegas. We've got one coming up in Florida. Every time we do a syndication, or no, we don't do syndications. Every time we go out there and have a presentation and people sign up to be in my program, it's called the H2A Cohort. I put people in 25-person groups. And that 25-person group, we meet once a week and we go over the activity that's going on within that group. Everybody is responsible for going out and finding deals. Everybody's responsible for going out there and finding debt. Everybody's responsible for finding their or bringing to the table their own money. Now, if you don't have that money, borrow it, whatever, but this is how you get into deals. So when we finally get that deal into contract and we put the numbers together, we figure, hey, we need 5 cohort members what 5 members want to sign on to this deal. And right as a member of that cohort, you can jump on other people's deals. Each one of them brings in their own equity wherever they get it. If they borrow from their house, if they have a savings account, an IRA, what have you. They can get into the deal that way. But that's how we create these deals. So right now, the first cohort, the Chicago cohort, we have our first deal into contract. It took us less than 60 days to get the first deal. And we've got about 2 or 3 other contracts out there, other P&Ss being negotiated right now. And that activity, I've never, in all of my years in multifamily, I've never seen that kind of activity. It's absolutely phenomenal. So that's what we're doing, is we're putting these teams together to take down the deal. And that's one of the beautiful things about this. You don't have to do big, huge deals, 300 unit deals. That's not the size deals we're looking for. 300 units is actually a bad deal in the hotel to apartment conversions. I want to explain to you why. Come on to our presentation, our 3-day event that we're having in Las Vegas, and we are going to go through all of these concepts with you, so that by the time you leave, you will get it. Let me just give you an example. My first cohort, my Chicago cohort, it was a small group of people in the room. 90% of those people signed up to join my cohort. That's how at the end of 3 days, they understood what I'm throwing down here. They got it. It was mind-blowing. I've never seen a rush to the door to get your application in. Right now, we have a waiting list for the next cohort to sign on board, but we are opening up our second cohort, and you can be a part of it. And it's going to be, believe me, there's so much stock out there that you don't have to worry about. Well, will I be able to find a deal? You'll be able to find a deal. You'll be able to find several of them. Every time a student brings in a deal, David Peters and I look at it and analyze it and figure out, is this a good deal? So you work directly with us. You don't have to worry about, we're not sending you out there to the wolves. We're looking over your back and over your shoulder every step of the way. So that is how these hotels to apartments convert. One of the things that I want to stress here is that the really cool thing about this is not all conversions are the same. When we look at a deal, we might want to do a hybrid model. We might want to do a model where we run part of the property as a hotel and we run part of the property as a multifamily. We have a couple of deals like that right now. And it's really a great concept because cash flow is crazy. It is so amazing how good these numbers are. So we help you analyze that. We help you put that through. We also, you get everything that we have. You get our template letter of intent that gets generated right from our customer relationship management software that I developed, and I spent almost $250,000 of my own money building out this software. And that's where you put all your attachments. That's where we go to look to see what's in there. When David and I start to analyze the deal, we track all of the properties that we're looking at. on another system, and we speak back and forth with our cohort members through that. We call it the business operating system, the H2A boss system. We communicate with our students that way. Everybody's on their own cohort. You can see what everybody's been doing. And that's the thing, is all of our cohort members work together. We're all in this together. We all want to see each other succeed. As a matter of fact, I'm going out to do a property tour of a hotel here in Massachusetts. And 1, 2, 3, 4 of my cohort members are going to meet me there, and we're going to walk the property so we can really take a look at it. And then also we're going to do a Zoom call with David Peters so he can see the property as well. That's what we've done so far on many of these properties that are in locations we're not around, so that we can really get a good look at the property and you don't have to be there. So it's fantastic. We talk about the raising of the money and how we make the deal happen. Obviously, when you've never done a deal like this before, but we have. So we're going to partner with you in the deal to sign on the dotted line with the lender. We're also going to help you raise the money through the cohort. We've got some very deep pockets already within our cohort to help get you funded. We're not going to ask you to go out and, raise money so that you can be a GP or an LP. No, we want to create all of our deals so that they're joint venture partnerships, where everybody is equal at the table. And by doing it that way, we can structure the deal in such a way that we don't have to be beholden to a preferred return. No preferred returns. We're just in here to get in there, make as much money as we can, convert that property as quickly as we can, and get out to move on to the next deal. And 1031 our proceeds into the next deal. In other words, we are true real estate investors. We are taking advantage of the tax advantages of owning real estate in these deals, and that's the way we're structuring them. Because if you look at these syndication models, you're not a real estate investor. You're just an investor. They're paying you a 9% preferred return every year. You pay taxes on that. They sell the property, make a profit, you pay taxes on that. What we're doing is we're trying to build up our net worth, build up our legacy, buy more property, and we're going to take advantage of the tax benefits of that property and roll it over into the next property and just keep growing and growing and growing. You don't build a legacy for your children by having to find another deal every 5 to 7 years. You stay in the deal, and everyone in the joint venture partnership is making the decision together. Like, okay, let's sell this property. I want out. Okay, we'll buy you out. Or okay, let's sell the property now, and we're going to 1031 it into something else. And believe me, with the level of activity that we have going on, that's how quickly we can go find another deal to roll it into. You won't have any 1031 deadline issues up against you. So I'd love to see you and teach you everything about this concept. We're doing our next event in November at the Palms in sunny Las Vegas, Nevada. Check out H2A Apartments, H2A Summit.com. Actually, you know what? Don't listen to what I have to say. Click on the link that's in the show notes, and we'll get you signed up, and we'll see you in Las Vegas to set you on the path towards becoming a real estate multimillionaire yourself, not making somebody else rich. That's the difference between me and the other guy. I'm actually going to partner with you to make this thing happen, and I am very excited about it. I think by this time next year, I think I'll own probably about 10 hotels. Kind of reminds me of the old Monopoly. Remember, what Monopoly? You got to buy those red hotels. That's when you really make the money. And boy, that is so true. And now we know why. So join me in Las Vegas. And I will, and if you're watching this podcast and Las Vegas has gone by, maybe I've got another event coming up, but don't wait, because future events are not guaranteed. And the prices keep going up on entering my cohort. So that's something that you want to jump in early and make it happen. So, all right, everybody, it's been great to see you. I hope you enjoyed this little sales pitch that I did for hotel to apartment conversions. But it's been I honestly tell you, every legitimate real estate investor that I've spoken to that understands the concepts see this and they say, Charlie, you're onto something. So get on my my pony here and let's ride off into the sunset together. All right, everybody, great to see you, and I will speak to you next week. Bye.